Okay, thank you for joining and welcome on board from anywhere you're joining. We really appreciate you for joining, and we're gonna go deep into the discussion for today. Well, intentionally, kept this quite uh, short and focus on enlightenment because the only way we can get much value is just creating the awareness first, and then for anyone that want to have better engagement, want to have one-on-one section, then we would make arrangements to book time with one of our specialists, and then they can talk specific scenarios to yourself. So, as I start this webinar, this is for information only. None of this is taken as advice. So please make do this works for you by speaking and consulting with a specialist in this space. My name is Deji Nehan, and I'm a mortgage broker in the UK, property specialist. We have access to multiple developers in the UK, and we're going to showcase some of those projects. So either you want to buy property in the UK or you want to get the finance in the UK, we're going to show you what to do and how to make that happen. So thank you again for coming in. Please listen. If you have any question, please let me know. All right, we'll go ahead. So the highlights, key things we wanted to drive home and take away for this section is insights into UK property investment, opportunities for Nigerians, because a lot of people don't believe or understand that's even a possibility. Understanding the mortgage criteria for Nigerian investors, exploring investment options, and then reviewing available investment projects. We're going to go through this main highlights today. So, if you have interest in any of our published work, if you go on Amazon, you get access to quite a few of our work, about 8 and still counting. One of the things that will interest you for this particular topic is off-plan property gold mine in the UK and how you can tap into that opportunity. It's not restricted to off-plan. So some of our titles are about property in general and how you can be more aware about it and take the right steps towards achieving what you desire in this space. So, reasons why Nigerians invest in UK. That's a lot of questions some people ask me, and fortunately, we've had a couple of videos we've done in the past relating to that. So, I would encourage you to check those videos. We've got some on YouTube. Please check those videos. But mainly, we did some of those videos because we had a conference in Nigeria last year where we had some developers come in from the UK to showcase some of their projects. So before that conference, I did a bit of videos, maybe about 12 or so, um, discussing the major reasons why we notice a lot of our clients invest in the UK. So we're going to go through that shortly, but I would encourage you to spend more time and watch the videos as well later. So those are the videos we can share the link with you later. And yeah, and just to show, like I said, we were in Nigeria for investment roadshow, and some of the reasons what we were able to focus and discuss on was Nigerians were kind of encouraging Nigerians to have to utilize the UK mortgages for investment diversification. We're going to talk about that shortly. So those are some of the publications we have been published in. We have done also some TV interviews relating to the Nigerian economy and the diaspora in a nutshell. So one of the important things, I'll just touch on this, but there's a lot more things we can deep dive. The stable economy, the UK offers a secure and robust environment for property investment. Anybody investing in Nigeria would really appreciate this. There's a stable economy and it's robust. It's been proven over the years. The systems, the policy are well aligned to make things work properly. Similar stuff, they have strong legal system, a transparent regulations protect property rights and investor interest. So you don't have a situation where you buy property and in future or even in present, you have homonile issues, or even if you buy from an estate, you don't have that kind of peace of mind you will get by investing in a system in the UK. So that's something. Legal is very solid. If anything goes wrong, you'll be compensated for any of things that is not in that is not your fault. So that's really a big thing for most people. I return. So as an investor, I always say it's the numbers that matters. If you're investing, you want to understand what's your return on investment, what's the capital growth you can achieve on a property, and then that gives you the benchmark or the metrics to actually compare one location, one property to the other. So high returns, cities like London, Manchester, Birmingham deliver strong rental yields and capital growth. Even there are other major cities. The good thing about UK is there's technically no village. Every development happens almost equally. Yes, some locations are more popular than the others, but it's not like they are lacking in any amenities or lacking in any infrastructure. So that's really one of the major drivers. Diverse opportunities. There's a wide range of opportunities. You can do residential, you can do commercial, you can do student accommodation. There's quite a wide range to consider. Thank you for those joining. We appreciate you. Education driver. A lot of people understand and have leverage on the UK education system. A lot of people are familiar with that. They have children's schooling in United Kingdom. They have familiarity with that system, so that makes a lot of stuff. So, in one sense, also it creates a high demand, which means that um, in property, the higher the demand, the better you can get better returns on your investment and better growth opportunities. Familiar market. So Nigeria is very familiar with the UK, especially because it's about 6 hours away. It's not impossible for people to use UK as a hub to travel to other places. So that familiarity is something that drives the reason why people invest in the UK. Financial advantage, property investment edges against currency devaluation. So, UK pounds is one of the globally recognized stable currency. So, people invest in that as an edge against their country devaluation or their country currency fluctuation. We've seen a lot of drivers into that recently because of a lot of fluctuations happening in most African countries or devaluation. So UK pounds have always maintained a very strong base. So that's one other important thing. Investor support. That's one of the things we pride ourselves in. As a company, we partnered with, like I said, we have multiple projects in the UK. We partnered with the right legal system that understand the Nigerian investors or foreign investors at large. We partnered with rental companies that would be able to rent out your property either as a family unit or as a service accommodation. So it's an all-inclusive end-to-end solution that we've been able to do. I'll show you the systems we have to make that happen. So it just gives people the peace of mind to know that yes, they are dealing with the right professionals, but more importantly, there's someone holding their hands to support in this journey. So that's very important thing. As an investor, I said it now and I'll say it again. Data is king. You want to know your numbers before you put your money into an investment. Baseline stuff will be understanding your return on investment. That's something you can calculate yourself, or your return on capital employed. And this is a big driver, and we'll see the difference in that as well. And your capital growth, that's very, very important. It's just not capital growth that is not proven, that has no history. United Kingdom capital growth has been proven over the time. You hear popular stuff saying property will double every 10 years. That means if you buy a property 100,000 now, in 10 years' time, it would be 200,000. That's what most people apply as a quick benchmark. But I tell people, even if you're cautious, say it's 15 years, that is still a very good stuff. And when you have that year on data to support that, then that's fantastic. Some years might be very low, some years will, but on average, That's what people tend to see. So we're going to delve into what that means in the UK economy and what that means in Nigeria. So one of the things that interests me, obviously, as property specialist, is to understand the different metrics and the different drivers of investment in different countries. We have interest in United Kingdom, Dubai, just United Emirates as a whole, and also very important to me is my interest in Nigeria. So I always look at those metrics. So now metrics is one of the stuffs I recommend people follow and see what they are talking about generally, about the economy, about the country itself. So they came up with 10 most expensive estates in Lagos. And that was interesting just for me to see how does that benchmark against other countries. So and the table here, let's say numbers is king. You need to understand your number. If you're an investor, you want to be clear the numbers are working, not an emotional buy, not a trophy. Yes, maybe another reason why Nigerians invest is UK is considered a trophy asset. Oh, I have a property in the UK. But we want people to move away from that. We want people to understand that the maths work, that you're getting very good returns by investing in the UK, not just because you want to use it as a bragging right. It's a good thing, it's okay, but more importantly, you want to understand that the figures work. So we did quickly Lagos Property Hotspots. We did a bit calculation on the return on investment on your return on capital employed and the capital growth. So we picked the Nairametrics highlighted the most expensive estates in Lagos. We use that as a benchmark. So you can see in Banana Island, you can see the property value, you can see yearly rent, you can see your return on investment 3.2, return on capital employed 3.82. The big reason why this is remaining the same thing is in Nigeria, most people that invest in property have to buy cash. So you are employing the whole amount to achieve the same result. Capital growth is 12%. I always say on what data, what's the history behind that. Banana Island is not being 40 years or 50 years record. So those are not very substantial data for me to believe. And also the dynamics of somebody selling or just want money back, needing money for any means, and decide to sell off an asset and then affecting the whole area is something else that you need to concern with. So, but in general terms, you look at the investment you would do in Nigeria and then see the yearly rent you're getting on that, and then apply similar across other countries. So sometimes when I show people this, they realize, wow, in some areas in Lagos or in Nigeria generally, it's not cheap to have investments there. Some of them are even much more expensive than you will get in the UK. But as an investor, this is not somewhere you want to live. This is somewhere that you want to do as an investment. So let's go to the next one. This is what you compare to in the UK. And the major driver you will see is the return on investment. In return on investment, it's almost double what you would get in some locations in Nigeria. And these are subjective. We're just taking an average view. But it's from experience and from most of the clients we work with, we realize that a lot of investment in Nigeria, the rent they are getting is it's subpar to what you get in other cities, in other major stuff. And even to the annoying part for most investors in Nigeria is when you rent out your property, you don't have that confidence to say that this tenant is going to pay you year on year. Because yes, you pay 1 year, there might be issues with the tenants in the next year or something. Yes, it happens in the UK without any doubt, but there are a lot of mitigation you could apply to that. Some of that is just as simple as having a landlord insurance in place that would pay for your rent after the first month if your tenants are not paying. So those are some of the things that you don't necessarily get in Nigeria at the moment. So we've shown London. I just don't want people to focus on London because for a lot of investors, they can't afford London, to be honest. And even if they can, the return on investment in London is not that great. for the amount of money you're putting in. So that's one of the factors we consider. So we looked at other locations, and it could be Birmingham, it could be Sheffield, it could be Liverpool. There's different locations, and we compare the yearly rent and return on investment and the capital growth. You start seeing that you, on the same par, you're getting a lot more. Why the return on capital employed is massive is the fact that for investment in the UK, you only need about 25%, which is a big difference. So for the same investor that wants to buy maybe in, let me go back, pick something quickly. Let's not pick the most expensive one. Let's pick maybe 300 million. That want to invest 300 million in Nigeria, they would need to put in all of the 300 million at one go, or maybe space if they are buying an off-plan project. But 300 million, if you just use simple calculation now at £2,000, that's about 150,000 pounds. That could effectively could be spread across two properties where you only need about 25%. When you do that, then you realize that you have two assets growing, and you have been able to leverage more returns, because at least the 300 million you would have used, you've taken that, you spread it across two properties, and your property are growing in value, capital appreciation, and your return on investment. So that's a massive thing for most investors. I want people to focus on that. But again, we are not telling people not to invest in Nigeria. I mean, every real estate has its stuff, but most of our clients are at a position where they want to diversify their wealth. They just don't want to be focused in Nigeria. So that's most of the clients that we deal with. A lot of people in the oil and gas, a lot of people in banking sector, telecommunications, and quite a lot of people doing their own business. They want to diversify. They want to do some of the 12 things we've talked about where people invest in the UK. But more importantly, they want money to work for them, and they want their money to work globally. But one other factor that gets people interested more in places that are more stable economy, is the confidence that they have in the market. Just a recent publication from Lagos State is saying about 176 estates are illegal. Either you bought it right or you bought it through somebody. Everybody would have some concern. You say, "Is my estate part of those illegal estates and stuff?" So that's just one of the reasons a lot of people invest outside Lagos, outside Nigeria, and we have UK for people. So one is the fear of what could happen to the land I bought in Nigeria. The other is the cost that people don't usually understand from the upfront. Because a lot of mistakes people do is, oh, you can buy this land, this is how much it's going to cost you, or you can buy this project, how much it's going to cost you. They've not considered the overall cost. And that's why we say, I am very big on numbers. Understand the numbers and let the numbers work for you. If the numbers is not working, then that's not an investment. You want to wait and shift to the next one. Do your analysis properly. Good thing is we'll be able to do some of those analysis for you, and we'll be able to tailor it to your specific scenario when we have the one-on-one section. So a lot of the costs that people don't remember or forget to put into the cost when you're buying property in Nigeria generally will be apart from the land purchase price, we'll be talking about the survey and surveyor fees. We'll be talking about legal fees, agency commission. Nigeria still charges one of the most expensive agency fees. So the real estate guys are doing brilliantly well on that. So, but those are things that you want to consider as an investor. You want to consider your title documentation and a lot of work you will need to do to regularize your paperwork. Even when you have a C of O, you still want to make sure that it is valid and you've done your due diligence to ensure that you've not been sold a fake document to stuff. So there's a lot of stuff that people need to consider. You start paying for infrastructure if it's an estate you're coming up with, and sometimes people are not prepared for this. So you need to be aware. And obviously, like any project, even in the UK, you talk about miscellaneous. We always say, always put that as part of your plan. that should be your part. It shouldn't be a surprise. It should be part of your calculation. So bear that in mind. So criteria for accessing mortgage for Nigerian investors. So this is a big one. And like I said, we're just touching on this, creating an awareness. But more importantly, we want to showcase to people that it's definitely possible for you to get a mortgage in the UK, even if you don't live in the UK. If you live in Nigeria, anywhere in Africa, any foreign investors, you don't have a footprint in the UK. The good news is you can get a mortgage in the UK, and we're going to show you how that happens. So, one big thing is really you don't need to be a UK resident. That's really the most important message you can take away from that. You need a valid international passport and your proof of residence, because due diligence, KYC, which is know your customer, and your AML are very strong in here. So you need to have those documentation. So apart from that, the other important thing is your income and employment proof. How do you prove that you have the money and you've been able to have the savings to buy this property? Like I said, you can do 25%, but you need to prove where is that money coming from? What do you do? How long have you been doing what you do? So, like you would expect from any bank, even in Nigeria, to assess, okay, we want to loan you some funds, they need to have a profile on you. And that's what this is entails. So, for a lot of people, on average, about £40,000 equivalent of income would be sufficient to get a mortgage. Some would be lower because there are some lenders that do a bit lower. So, but that would be the initial starting point. We can have discussion on which one would work best for you. Deposit, I've talked about that. Previously, we used to get about 40%, but there are quite a few opportunities right now that allow you as a Nigerian to do 25% deposit in an investment. So this is in itself a brilliant concept. You don't live in the UK, but you can get mortgage for an investment property in the UK, and you only need 25%. Just let that sink in for a bit. That's unbelievable for most people. So that's which is the reason why we want to ensure that the right set of people get access to this information and they can start creating wealth globally, not just focus in one economy. So that global stuff, they can start earning foreign income on their assets. That's really the reason why we are talking a lot about this. Creditworthiness, they'll need to understand your bank statement. Obviously, that shows what your financial activities are. And if you're a business, we'll need to look at your dated business account and your tax returns. I tell people not to be too worried about this. If you have been doing your business for some time now, all of this record you will either have, or you can work with accountants that will help you to put all of this together. So that's not something to be worried about. Property type and value. So most times what I've been focusing on is buy to let, which in simple terms is your investment property. Um, that is the focus of our conversation, but there are a few lenders that would allow you to buy a residential property. That means the property you want to live in that you don't want to rent out. Take, for example, you have students, you have children that are students in the UK, or you come into the UK often and you want to have your own assets. So there is a residential opportunity for you. That's very limited, so I don't want to talk much about that. But for most of our clients, for most people, they want to earn money from their property, which is why we're having this conversation. Also, like you just mentioned previously, anti-money laundering, it's a very big deal. You need to understand what's the source of your funds, what's the source of your wealth, and ensure that all of that is covered. We would usually need about 2 years of your record to be able to show that. If you've been trading for a few years, we just need to show when did you start, how did you start, and how have you been able to build that level of wealth over time. For some people, it's very basic. There's nothing complicated about this. They've been in business for 2 years, for 10 years, for 15 years, and this is what they've been able to do. They do this, and this is their profit at the end of the year, or this is their, for a lot of employed people we work with in the oil and gas and financial services or telecoms, it's this is my salary, this is how much I make, and this is what I've had in savings over time that is accrued over time. So I think the important thing is let's have a conversation and see how we can help you to do this properly. One of the reasons I've shared earlier is the solution that helps you to bring all of this together. End-to-end service, we see ourselves as a concierge where we pull in trusted partners in the legal team, in the lettings team, in anti-money laundering, in KYC. We put all of that together and we created a platform that allows you to do things seamlessly. It's a lot easier and it helps you to be able to move through this process quickly with more confidence that this thing is being done properly. We would initially go on a discovery call with you just to understand what do you want from this? What's your situation? What returns are you expecting? Is there anything more we need to be able to be aware of early days so that we can tailor the solution specific to you? Usually, so people will go through a reservation, and reservation varies for the different projects we have. And solicitors will introduce to the solicitors, they will do their KYC and stuff. Then you will talk about the contract and then the completion. All of this we have mapped out in a system that makes it easy for you to go through this. So we know property could be a difficult thing to invest in. The time involved, the transparency, and all of that. We just want to make sure that at least we have a solution that helps you to go through that in a lot easier way. So this is this. I'll show you a bit more about that. Sorry, just to say, if you have any questions, please drop this in. We would cover your questions at the end. A lot of questions that's been asked in the past, we've incorporated that into our training. So most of your questions would possibly be answered as you listen along. So in terms of most projects, most developers we work with in the UK, we've got about 80 developers that we work with and to get their property and then arrange the finance applicable to you. One of the fantastic things they do to make it easy for you to consider an investment is they have different plans. And this is just a quick glance of one or two of what we have. We have about 80 developers. We have multiple projects across United Kingdom that would share, but we just wanted to use this to show you that if you're buying into a development project, something that is being developed or something that is recently completed, this is what the reservation fee will look like. For one bed, for two bed, we've just done it differently. Most times when you're interested in this, we've checked this would work for you, we've understand your finances would work, then you would expect to put down a reservation fee. The reservation fee on average is about 5,000. Sometimes it could be less than that, depending on the developer. So, and some would give you staggered payment plan. So some would do 10% staggered, maybe for 6 months or for 1 year. It just depends on the project. So we always encourage you, let's have a conversation. We can show you what projects that are available, and then you can make your pick from those projects and see which one really it's something that you want to go ahead with. So that's really how it works, because most of our clients invest in projects, maybe off-plan projects, because they want to tap into the capital appreciation. Because when you're buying early, you would obviously get some discounts, and you'll be part of those that would wait for the property to appreciate in value. And then at the end, you've already locked in some value. So this is, in simple terms, what a lot of our people do. You come in and buy a property, maybe a development is going on for maybe 18 months on average, 18 months, 24 months, most projects would complete. You're buying in at that point where it's still just not what the end users want to see. Because you are an investor, you understand if you can find trusted developers, you can work with them, um, do an investment with them, and make sure that you're getting very good returns when the project is completed. So that's what it means. Payment plan will be specific to different projects. The time to release the deposit, we would also help you to consider that most times 6 months before the completion of a project, we've already started looking at the right mortgage solution to support you. And that would be what the rest of the, like I said, you do 75%, and so you do 25%, and the banks would give you 75% of the property value you were going for. So, which is fantastic in itself. So, your 25%, as I just explained, could come in trenches for some development. So, it could be 10% initially, and for some, it could be 20%. But let's have a conversation and see what really fits your own criteria. So similar stuff, we just use another payment plan just to showcase if you're interested in an investment, then there will be a reservation fee. And through that, we will then assign the solicitor. Solicitors will check your paperwork to be sure that the mortgage can be satisfied on your record. Either you're buying it as a personal name or in limited company name. All of that we would go through in a one-on-one section. So not to be confused about that for now. So some of the projects we have, I've just chosen a few. We've got 80 developers. We can't show all of their stuff, but there's definitely some projects that is relevant to you. So please, that one-on-one would help you to actually know exactly what you want to invest in. You'll be able to streamline it and say, these are maybe 2 or 3 projects I like and I want to invest in it. So this is just one example. And I've just chosen that because a lot of people would understand what Heathrow is. Heathrow is an airport, and that means that there's a lot of regeneration, there's a lot of activities going on in those areas. Again, in some of the videos we've seen earlier, is the demand. Where there's a high demand, it's just not for the local people now, it's a demand for maybe people outside even the local community. They're coming into Heathrow to travel, and there would be a lot of stuff, a lot of activities, a lot of businesses that are just working in that space. And that's some of the reasons why I thought I should show this project. Um, it's called the Elizabeth House, and for some of these, you realize that you can get very good property in good locations. That is not maybe the most popular you would know, but our job is to work with numbers and make sure that the numbers is working for you, irrespective of the location. It could be in London, it could be in Kent, it could be in Scotland, it could be anything. The question you want to ask is the investment, is the calculation, is it sensible, is it something that is working? So that's that part. So on this project you have very limited unit left. I think this is reduced now because that's been updated. It's very usual that we get updated on the project often, but this is part of the slides I've used before. We still have a few units left, so if this is something that interests you, please have a conversation and we'll be able to guide you on to the next step. So purchase price starting from 282. This is London price, so it's still a fantastic deal for the location and for what you get in that vicinity as well. So another project, this is Liverpool, 180, 1,000, and you can get anticipated rental return 6.25. One of the good things about this is the developer is ready to guarantee your returns for at least the next 3 years. And this one of the good things about development is they are city centers location, which means that you have access to younger generation that don't want to drive, just want to live as close as possible to the train station. They work in good places. Maybe they don't even go to work every often and stuff. So that is the market you're seeing. and that's where we have most of this development block in the city centers, close enough to the city centers that would make sure that the capital growth would happen very well on this property. So this is another stuff to show you something in Itro, just to balance that. That we've got, there are other projects in Liverpool, and this is a platform. I would encourage you to copy the details on that. So on this platform where we have put everything together to make it easy for you to source property that you want and then to invest in those properties. So these are varied properties in different locations. So you need to filter and then be able to select what you want. But important, I would say take note of that is propertyconcierge.propviewer, and the viewer has no E before the R .com. So that you would have access to multiple. Just play around. There's multiple projects on there. There's multiple price point. There's multiple um, structure in terms of the payment plan. So I would really encourage you to spend some time, register yourself so that when there are new deals coming through, you'll be part of those that have access to those deals because some of the deals are time sensitive. So shortlet Airbnb. So for a lot of our investors, one of the things we help them with partners we have is to just not rent out to family units. They can rent it out to Airbnb. Like I said, most of this development are in city centers, which is obviously a prime location for contractors coming into the UK, people doing relocation for so many reasons. People doing that, you can then use the property investment you bought as a shortlet model, which means that you're technically getting a lot more than what you would get from a residential, and that's something that interests a lot of people. So again, if you have any question on that, we're happy to answer further questions. Initially, I said there's different variation of property opportunities in the UK. We've looked at standard property, we've looked at flats, we've looked at service accommodation, which a lot of people are leveraging on. There's a lot more. There's student accommodation where you are buying a investment into a potentially a university city or town. And what that means is the demand for the property is high. Not just property, quality, high quality property is quite high. And one of the good things with buying projects or buying offline is the fact that you are buying this sparkling new. So it's the first time, which means that if you list it on Airbnb and Booking.com, you're most likely to get higher returns because people will pay for the premium of having access to um, property that stands out. So that's student accommodation. Again, if you're interested in this, please give a shot. Again, the numbers are important. You're getting 7% net. So this is not a solution where, oh, they said you get this. I was speaking to a client. They say you get 80%. They said that's fine, but you'll be the one to pay for this service charges, that and that. You need to find out what exactly are you getting that will come to your pocket. What is the net figure, which is possibly what interests a lot of people. So this current block of student accommodation is still available. So if you want some good investment, this has been discounted from its original. This has been discounted from its original property value, so it's a good time to tap into this. So this is just one of the units we do have from developers, and I wanted to showcase just something slightly different now, uh, which is called account. So that's Dickens Yard. Yeah, I'll come to that now. So this is still student accommodation, Dickens Yard. And again, similar stuff applies. You're putting your money into a location where there's a high demand from students, and you have already built proper solution for student accommodation. which is called PBSA, which obviously I already tell people before developers go into areas to do a student accommodation, they've thought about the demand in those areas. They've consulted with a school, university to know what the future demands look like, and they said it's worth them investing in that area. So student accommodation might not be popular for a lot of people, but that's a very good investment, especially now where there's a lot of rules and regulations that people need to apply with in the UK. So that might be something for people to consider. So the other part of what I wanted to see. So I said there's many options for property investment in the UK. You can take any of these options I've discussed and now add another layer to it, which is what we focus on as called social impact investment. What it means is you're just not renting out your property to everyday people, you're renting your property to vulnerable population. These are seniors, these are disabled, these are low income groups and stuff. And most of the time, they would need support. So that's why I call social impact investment. Support staff may help with life skills, employment, and stuff. It's funded by the government, non-profit, and private, public-private partnership. And one of the fantastic things you get from social impact investment is a long-term lease. As an investor, as a developer, as a landlord, you don't want to have a project that once you have sold on the project or rented it out, you don't want to be getting regular phone calls to say, "Oh, this is happening today. What can we do? What do we need to do?" and stuff. So uh, it's quite important if you can get investment that would mean that they give you an FRI list, which means a full repair and insured. So if anything happens to your property while they have taken it from you, they would repair and bring it back to the normal livability of the property. So social impact, I definitely encourage people to look into this space. It's it's not new, but it's getting more traction. It's being talked about as a solution that a lot of people would follow on. So definitely, this I would encourage people. This is a big business in itself. So don't take it for granted. See how you can tap into this market. Either you're providing property for this, or you are working with the care providers to provide solutions for staff members, or there's so many things you can think about. So that's where that is going. So under supported impact, social impact investment, you have maybe a different flavor of that. You have the supported living, you have the assisted living, you have the social housing, and you have the out nursing home. There's maybe a few more on that. Specialized care as well is something to look into. I don't want, as an investor, I don't want to give you too much information about supported living or what it does. So this is not a prime value for you. We want to focus on the project. We want to focus on what's possible and the numbers. So this is an example of a solution supported living. It says it's one bed. Square footage is quite nice. It's about 144, where you're getting rent about 1.2, which is fantastic. Is net yield is about 10%, which is fantastic on its own. So, which is the reason why we're nudging people to look at the things around social investment, and the guarantee for most people is the government are paying for this rental, for this solution. So you just realize that it's a long-term solution. The UK is a welfare country, so they would want to take care of any vulnerable concern that they have. So you, as a landlord, you as a property investor, you can tap into that, and those are solutions we can bring to you. We have some projects that is focused on supported living. One of them is the newspaper house, and that's the price point. And this is what you get in terms of annual rent. Imagine you are buying a property for 144 and you're getting annual rent about 10%. So technically in 10 years, even if the property does not appreciate in value, or you have not increased the rent for that period, it still means that you are recovered all your money back, and potentially the property is an infinity returns to you. So same stuff still applied there. This is a different project. This is a um, freehold semi-detached new build house, which was repositioned to be used as social impact investment. So we work with providers that can provide you this solution. And for this project, they're getting 12%. If they are renting out that property on a single unit, they won't get anything near that. So it's a good strategy to think about. It needs a bit of work, but I know. I mean, if you're on this call, you're not scared about work. I think what you should be scared about is making sure that you're doing the right work. That's really important. Yeah, so that covers most of what we wanted to discuss and just showcase what are the potential possible when you invest in the UK. I'll check if there's any question, but if no questions, like I said, we've covered most of these things over time. Please, we would want to keep the engagement going. We want to share more insights with foreign investments in the UK. We want to see what your situation is and how we can work together to create a global world for you. This is the reason why we are having this, not just to be restricted to one location. We want to make sure we, in the simplest way possible, that your funds are actually working for you. Because from the example we've shown, putting in 300 million, the returns you get would be maybe 5 million, 10 million a year. And that is quite a lot. So if you work that out, it will take you, let's say it's 5 million rent you're getting. If you work that out for that same property, it will take you about 60 years to recover your funds, which in the sense of itself, it's a long time. Yes, it's okay. People are not buying property for what is immediate to them. Your future generation would enjoy from it and stuff, so which is fine. But just creating that awareness, understanding that investing in property could be a good leverage for you. You could find people that can hold your hands to make this happen, which we would gladly want to do. And yeah, so that's pretty much what we wanted to cover. It's mainly an oversight, it's mainly to get you aware, it's mainly to create an opportunity for us to have next conversation. So please, any part of where you have connected with this, maybe on LinkedIn, Facebook, or direct message from my team, please drop us a message back and let us see how we can work out a appropriate solution for your um, for your scenario. So this will be different for different people. Excuse me. This will be different for different people. So we encourage everyone to be able to allow us the opportunity to look at your scenario and then work out what it is. Just quickly check if there's any message. Um, message on there. Okay, so that's good. We haven't got any message currently, but like I said, most of the questions I was asked in previous webinars, we've incorporated that into this. So the next step is please send us a text, send us a message, and we'll be able to book you on a one-on-one section. And what that means is you can then explore the solution specific to you. What's your situation? What's your scenario? And how can we help you to get a UK property, a UK mortgage, even if you don't live in the UK? That's very important. So please encourage you to drop us a message or drop us a chat, and we'll be able to take things from there. If you have any question, maybe you want to raise your hand or you want to drop a message, um, okay, either way. I just want to see if there's any question from the audience or um, that's already been covered. Maybe you've joined this session before. Okay, so no questions I can see. So what I would encourage is please don't take this for granted. This is an opportunity that is shared with you. Definitely, a lot of people are not aware of the possibility of having a property in the UK, using a mortgage to make that happen, and you've never lived in the UK. So please, we encourage you to share this information with others. Start preparing to create global wealth for yourself, because you don't want to be restricted to one economy. You just don't want to be restricted to Naira. And if any devaluation happens, you have an heart attack for that reason. So we want you to be peaceful with your investments. That's one thing UK allows you to. Yeah, there's regulations, there will be changes to government policies and all of those things. But all in all, you still realize that property is still standing. And for good reason. One, people live in property, people bring property up, family up in a property and stuff. So they have that affinity to property. And more importantly, a lot of people don't know what else they could do. Maybe they have been able to raise fund on their property. They've not. They had been paying down the loan, so they have good equity. They just don't know, what do I need to do? Is it a risk for me keeping on to my money? Is it a risk for the next generation, or can I start taking that money and start planning something for the generation that they would leverage on as well? So that's mostly what we would like to share. So please, again, my name is Deji Nehan. Really appreciate your time coming to the webinar. We really are encouraged that you join us. We hope we can help you to find the right property for yourself, or find the right finance. And just talking about property, some of the questions we've got previously, and I know possibly will be on your mind, is it only restricted to new build? No. So we have access to other developments that is not new build, or other property that is being sold, that is of good value in terms of what we potentially are looking at. So yes, to your question, this is not restricted to new build, but so work with us. We have something we call source to order. You give us what your requirement is, and we work with different partners to bring that solution to you. So that's a win-win for everybody. Win-win for myself. Win-win for you. Win-win for the electrical scooter person coming in. So I just want to say thank you. If it's okay, I wanted to get a feel of where you have joined from today. Uh, Please, would appreciate if you let us know where you've come up from today, and if this section has been useful to you. Okay. All right, we'll leave it at that. Thank you for those that are still remaining on. Definitely believe this is something you need to look into. Even if you know already now, at least having that mind, that at the back of your mind, would help you to start preparing in their respect. But all in all, we just want to say thank you. Thank you for joining this. Again, like I said, we want to keep it short and focus on the webinar itself. So thank you, everyone. I'm sure we'll see you on the next one, or share it with friends and family. And we'd like to create more awareness on this, because I always believe the more we can share the knowledge, the more people can at least lift themselves up from where they are. So please go well and prosper, but more importantly, start reflecting on what you want your property journey to look like. What has it been? What do you want it to look like? What budget do you have? What do you want to spend it on and stuff? So that'll be a good way, and I'm happy to have a conversation in that respect as well. Okay, thank you, everyone. Thank you for joining. We really appreciate you. Thank you.